Good evening to our valued listeners. My name is Chido Chashin Nicolette Mube, and today we're having a discussion on fintech in Africa. We are trying to have a conversation around the insights onto how the fintech industry or sector is affected or impacted Africa. So, with me today, there are three panelists. We have Christine, who's usually the moderator for such discussions, and Pooja, and also Sia. So I'm going to leave it to the panelists to introduce themselves briefly so that we can get into the discussion. I'll start with Pooja, then I'll go to Sia, and lastly, Christian.
Thank you so much, Chido, for the opportunity, and thank you so much, Christine. So, briefly, my name is Albert Puja, but again, you can just call me Puja as Chido has done already. I am a legal practitioner. I've been practicing actively for roughly about 6 years now, and interestingly, my area of practice cuts across labor and employment, intellectual property, and let's say more recently, data protection, fintech, and what have you. So, I'm really looking forward to the discussion today. Thank you.
Hello, everyone. Thank you, Chido and Christine. I'm Sia Aiden. I'm a lawyer. I'm actually quite excited to discuss this. It's an area which I'm really, really interested in, and it's been being an African. It's been interesting to see as we grow how it changes. Glad to have this conversation with you guys. Thank you.
Thank you for this opportunity, everyone. And my name is Christine. I'm also a lawyer and I practice tax law. And this is quite a topic of interest to me. And it will be great to have this discussion so that I can learn more from my fellow panelists on this topic of fintech in Africa. Chido?
Thank you so much, guys, for such a brief introduction. So, as I've stated earlier, our conversation is going to be mainly centered on how fintech has impacted or will potentially impact Africa. So, I'm going to start by giving a brief background to the discussion and then pose a question for the panelists to sort of explain to us their own understanding of fintech, how it has impacted the continent, and also maybe highlight the potential challenges or opportunities for specific countries. So, basically, development in the financial service sector has always kept pace with development in technology. And if we look in the 19th century, the business of banking was disrupted and globalized through the introduction of the telegraph. And in the mid 20th century, we saw the coming in of credit cards and all these other things. In the 1960s, we actually witnessed the first automated teller machine, which is also known as which some scholars and close followers of fintech are considering to be fintech 1.0. So from that, we can actually see that the financial firms have always been early adopters of technology. And currently, there is so much buzz around the fourth industrial revolution, which brought about a number of what are being termed disruptive technologies. And by that, we are talking about artificial intelligence, blockchain, which happens to be my favorite, big data, robotic process automation, and so forth. And these also, as I've mentioned, have left an impact or are making an impact on the financial service sector. So, but there is a report that was actually published by KPMG, which stated that in 2020 only, the global fintech investment was sitting at 105 billion US dollars. And for Africa only, the investment dramatically increased in the past 5 years and is currently at 23 billion. So that's actually a very huge amount if you look at it. And I mean, it becomes such a worthy topic to talk about and really get to understand how that 23 billion is really affecting the continent. What are the opportunities? What are the challenges? So I'm going to start with Pooja. If you could possibly give us your understanding of fintech. And also, maybe in that context, you might want to also give us examples of fintech in Africa, the traces of fintech in Africa, in African countries, maybe on the investments that we are talking about and the opportunities that arise as a result of fintech. Over to you, Pooja.
Just to kind of give an overview of what fintech is or how can we define fintech. So I think the starting point as we usually find in most other discourse, is that whole broad or generic statement that there is no uniform or collective definition, so to say, of a particular subject. So that also applies to fintech. Quite, it's not surprisingly so though. But again, we've been unable to find an exhaustive definition that can tell all that fintech is all about. But in its broadest sense, right, there are two activities that we need to put hand in hand. One is finance or financial activity, right? And then the other is now technology. The best way to understand what financing is or what financial activity would involve is to look at the financial services industry. But again, let's just take note that the financial services industry, when it comes to issues of fintech, right, you might have it linking to other industries. But in a nutshell, the financial services industry would involve four primary markets or players. So you have the banks, you have insurance, you have pension, and then you also have the securities market. So again, a discussion on fintech can not be done without recognizing those four broad industries and the activities that happen there. And then technology itself, which again, I think the simplest way to define it is anything that makes life better. So now drilling it down to how can we define fintech? The truth is, as I've earlier mentioned, no one has been able to give a very exhaustive definition, right? What we do most time is to just say that fintech involves finance and technology. So we contract those two words together and then we call it fintech. But when you look at literature, what will I say scholars have written, even reputable institutions, the IMF and all of that, you would see that there is a trend, right? There are different approaches that have been adopted over time in terms of how fintech can be defined. So some of these approaches, there are at least four approaches that we can see. So one is the content-based approach. So the content-based approach is, again, I think I've spoken to that definition. So it speaks to the fact that financial technology or fintech just involves that combination of how technology operates in the financial sector or financial industry, as the case may be. But that definition by itself is also a bit quite limited because, as we know, fintech spreads to other industries. So you also have finance involved in transportation. You also have in the health sector, you have reg tech and all of that. So it goes beyond that. You also have the objective based kind of definition. So the objective based kind of definition is akin to what, again, most of us here are lawyers. Again, we understand the mischief rule, right? So the law came to cure something that was there before. So people would want to define fintech in terms of what fintech came to rectify. So again, before, if you want to make a payment to someone, you would walk into a bank, fill a teller before the amount of money will be passed across to the other person. But now with your mobile phone and all of that, you can simply do that. So fintech has come to make things a lot much easier and all of that. So you see definitions around that object based. Another way is effect based. So effect based now looks at disruption, and this is where I think we talk so much about the banking sector. So you'd hardly see, if you see 4 or 3 articles on fintech, one would be about the impact that it has had on the banking sector. So definitions that are effect based, the effects based kind of definitions will seek to make reference, right, to how fintech has come to disrupt the market and disrupt the industry, how new players, startups are coming up, and all of that. I think I find the definition by the Financial Stability Board quite very exhaustive. I think we can make reference to that. They gave a definition recently that is very, very extensive. And maybe I'll take that lastly as the guiding definition that will I say, be adopted for our discussion. And then there's also the process-based approach. So the process-based approach kinds of speak to those definitions will tell you how fintech happens. So they'll speak to the beginning and the end. So what you would see across this definition is the fact that you need technology to be able to achieve the objectives of fintech. And then you also need technology to be able to access those services that are available under fintech platforms. So more or less, it's like back to back technology using to deliver the service and then technology also being used to use the service. So on that note, I think I've summarized those 4 approaches. And then just to briefly will I say, read out what that definition by the Financial Stability Board says. It says fintech is a technologically enabled financial innovation that could result in new business models, applications, processes, products, or services within an associated with an associated material effect on financial markets and institutions and the provision of financial services. So this is one of the most exhaustive definition of will I say fintech that you would find in literature, and it kind of accommodates all those approaches that we briefly mentioned: the content based, the objective based, the effect based, and also the process based approach to defining fintech. So thank you.
Wow, that was amazing. Thank you so much for such a comprehensive definition. I've already taken notes. Maybe, Sia, if you could just on perspective on how fintech has impacted the continent as a whole, or selective countries that you can give as case studies. Then after that, we can hear from Christine from a tax perspective. How can she place fintech? How has it impacted the continent? Maybe while you're answering the questions here, you might also want to flag out the opportunities that are present as a result of fintech, or the challenges that the continent gets to face as a result of fintech. Over to you, Sia.
Thank you, Chido. For starters, I would say that, as usual, as it said, has Albert said, has he defined it very well that okay, fintech might have come as a disruptor, but I feel like it's a good disruption. Currently in Africa, I would give a few case studies, but in Africa as a total, fintech has been like a great solution because there are things that on a normal basis were impossible to get through or to give access. A good thing is, let me give you an example. In the whole of, I think in the whole globally, Africa has more financial inclusion in terms of mobile payments compared to other parts, as in they have really worked so well. Example, M-Pesa in Kenya, in Tanzania, I think Uganda also has one. So the fact that people can send money easily in Africa without using internet, without being able to do a whole transfer, it has been an amazing thing. Not only that, in our African countries, we had a tendency of buying electricity. You had to make a queue to go buy electricity. But this has been made so easy that you can actually buy electricity from your phone. No need of making a queue. I personally, growing up in Tanzania, your parent would send you with money and your card to go buy electricity. But then right now, you can simply just do it over the phone. And not only in terms of electricity and maybe making finance easier, also agriculture. It was hard mostly for African agriculturalists like farmers to get loans. So all this crowdfunding that fintech has brought, peer-to-peer funding, it has really enabled people like farmers to actually get loans. So fintech currently has made it possible for the things that we thought were very hard. Like right now, I'll give you an example. There's an organization in Tanzania. I think it's also expanding. It deals with agri-tech. It deals with farmers. So it measures, it connects the farmers with the buyers. So it's like a middle person, and all it connects, it gives a market in the internet. You no longer have to actually outsource, go maybe to the market, but you can easily just get your stuff from the internet digitally to be delivered at home. Farmers can actually get buyers of what they produce digitally. So not only that, it also has made it easy for banks to actually lend them, because for a farmer, most of the farmers don't have how they actually put their how they actually put their accounts. I think Christine, you probably know this. They would They just write it, they put the ledger on a book, they write it down. They don't know all this about bank accounts and all that because it's usually complicated. And for a bank to actually lend you money, they have to see they have to see a history of how you've been making. It can't just be from books. So fintech has really been great. It has enabled people. It has given people access to finance, access to food, access to health. Right now, there's an app in Kenya, which I think it's called Afya Record, whereby you can just record everything about your health. It gives you details about your health. It also, what else does Afya Record do? It actually does a lot. So coming from you have to have a file has a medical record, you can actually have it on your phone. I would say that fintech has done so well. And okay, without everything is it might be everything is good and fairy, but also in Africa, the banks are suffering. The banks have got someone, like fintech has been someone who actually competes, makes the bank compete with them. On some banks have tried to manage, they have reduced maybe their cost, the transaction cost and whatnot, but still the banks are struggling. Some are struggling, some are not. They're struggling to get fintech, to get to how fintech innovators are. How do I put this? How they're competing with the fintech innovators. But the only problem that fintech has brought is that the banks no longer have customers. I'd rather just do it over the phone instead of going to a bank. So the bank has to think twice of how to retain their customer. They're always going to have customers, but they're those customers that usually, bring in small. But if there are plenty of them, it becomes something that's profitable. And not only that, the regulation around it doesn't permit the banks to go further. So it actually aids fintech investors, fintech startups more. Um, this is as much as I can say. I'll hand it over to you, Chido.
Thank you so much, Sia. You raised very important points. You spoke about financial inclusion, and you singled out mobile money, which is something that we are going to come back to and have a conversation around also. And you spoke about incumbents versus entrants, which is one of the biggest challenges that most people are not paying particular attention to. So, yeah, thank you so much. Over to you, Christian. Please, can you tell us about fintech from a tax perspective? How does Africa gets to benefit, or what are the pitfalls that we might need to pay attention to? Over to you, Christian.
Okay, thank you, Chido. And I like what he has highlighted on how much fintechs have benefited the population across Africa. But the thing also to say is that for governments, one quick way, the low-hanging fruits of these businesses is to tax them because they want the tax revenue to run the administrations and to fund the government budgets. So one of the biggest conversations that's happening world over is how not just to tax fintechs, but how to tax digital businesses. Because as you can imagine, a bank, which was a brick in the brick and mortar economy, you'd go to the bank, ask them for their records, look through them as a revenue authority and tax them. Right now, let's say someone has developed an app which is being used for crowdfunding or that kind of thing. First of all, for the revenue authorities to be able to track these transactions happening on these platforms, to be able to even apply, let's say, value added tax or goods and sales tax on such transactions is very difficult. But then also at the same time, to even be able to track how much revenue the app itself is drawing in is also difficult because you see, most of the transactions happen in real time and most of them are numerous transactions happening. So even to track them and decide and come up with the revenue that's being generated on the app may be a problem. But also that the other thing to say is that most digital businesses and fintechs, I would think, are in a very early stage. So in terms of right now, the initial cost of developing them is quite high, and before they even make enough revenue for taxation, it's a problem. So on that other side, there's also can be aggressive taxing of these businesses in such a way that even hinder their growth. So there's a balance that needs to be arrived at between the government and the businesses, because if you tax them too much, then they may not even be able to exist too long in the market and to supply these advantages that they're supplying. As been noted in a report given by, I forget which institution did it, is that most must be OECD. Like for most digital businesses, even a business like Netflix, for the years it has existed, it hasn't broken even to make profits. And it's because it's very capital intensive for these businesses, and before they recover even the cost and now make a profit, it takes a while. So again, with the discussion of tax, those are the other considerations I would say. And then finally, the thing I would say is that increasingly, what's going to happen across Africa tax administrations, which they need to take into account, is that tax compliance has to be voluntary, because you cannot track these businesses to tax them. And the situation gets even more complicated when you start using cryptocurrencies and that kind of thing, payments where the government has even no control of the money itself that's exchanging on the platforms. And so it has to be voluntary. Like the government has to strike a balance and ask like what regulation from a tax perspective supports you, so that it's more from a supportive side and they are complying voluntarily, instead of from a punitive side or trying to get as much as you can from these businesses before they're even making profits. Because the more, it's almost like it's a chase. The fintech and digital businesses will be running as far away from the tax administration, and the tax administration will be chasing them. But when there's a bit more of consensus, where there's a meeting to ask how much money are you making, what support do you need, how long do you need before you break even, then after that, come voluntarily and declare your tax revenues to us. Chido, those are the comments I have.
That's very interesting. I'm going to shift the conversation a little bit so that we look at financial inclusion. Like I said earlier, when Sia mentioned it, it's something that I feel is very important to talk about. So I'm just going to give you guys a little bit of statistics, and I'm going to ask the questions. In 2011, the level of financial inclusion in sub-Saharan Africa was over 23%, a little over 23%. But in 2017, it actually rose to almost 43%. And this significant increase was as a result of digital financial services. The launch and growth of digital financial services in Africa generally has led to an unprecedented increase in the number of people that are enjoying access to financial services. And I would say that for a fact, as being Zimbabwean, that's very true, because there was a point in our economy. I think it was from 2013 going up to 2020, where cash was something that was so, like, it was unheard of. And we then had the biggest telecom company, which is Econet, coming in and introducing EcoCash, which became the mobile money platform that everybody was using. So we started using EcoCash for everything, including paying for tomatoes at the lady who sits by the street corner. So at that moment, we could actually realize how much fintech had positively impacted the people that are, or what are ordinarily called the historically financially excluded groups. So I'm going to ask Pooja, from the Nigerian perspective, right? I'm looking at a Nigerian market, fintech market, which managed to raise about 600 million in funding, basically 22% of all the funds that had been raised for African startups, right? But still, we are told that such a society still has about 40% of people that are financially excluded. So I'm asking, from your perspective, do you think that the 40% margin has shrunk or is significantly shrinking because of the adoption of digital technologies within the financial service sector? And we're looking at Nigeria being one of the largest economies in Africa, and also having one of the biggest fintech, or how can I put, fintech sectors, so to say, or many firms within the African continent. So, how do you feel about fintech and financial inclusion from your country's perspective? You can also give examples of other countries, but I would want to hear from an East African, from a West African perspective. Over to you, Pooja.
Thank you so much for that very, I say, useful and important question that you asked. The question would, to a very large extent, be linked to one of the approaches that I used in maybe defining fintech, or one of the approaches that I said, if you look at literature, you'd see that they've used it to kind of define fintech, and that is the objective based approach, right? Or the mischief based approach, if you want to call it that. So, why did fintech come to be in place for in the first place? So, definitely, when we tie that to financial inclusion, what you would typically see, and will I say drilling it down specifically to Nigeria and maybe extending it to West Africa as a whole, what you would see is that the traditional financial services providers, right, we are unable to deliver financial services and products to all and sundry. And issues on financial inclusion, you have two key persons that you make reference to. So you make reference to businesses, and by businesses I mean SMEs, and then you also make reference to individuals and maybe families and all of that. So the question then is the coming of fintech, right? The objective of fintech in terms of ensuring that these small and medium sized enterprises, businesses, and all of that, as well as individuals that did not have access, right, to, will I say, the traditional financial services providers, have they kind of improved in terms of access to these financial services and products? And definitely, I think the answer is in the positive, right? The answer would be yes. The experience that Sia spoke to in Tanzania and other parts of East Africa is not very far from what we've also experienced in Nigeria and, let's say, West Africa. So definitely, you have these products in place that have made it possible for businesses and individuals to have access to financial services and products that they were not able to access in the past. So I think a typical example and something that has worked very well in Nigeria is like agent banking. So agent banking is just a structure that enables, will I say, banking services to reach rural areas and all of that. So it's worked very well in Nigeria. I wouldn't say that mobile money has worked as well as it has in Nigeria, as well as it has worked in other parts of Africa, especially maybe Kenya and Tanzania. But nevertheless, I think we've had a lot of benefits from agent banking. So in the past, you have communities or rural areas that did not actually have, like, say, ATMs, or did not have bank branches there. But with the agent banking arrangements in place, you have agents all over the places. I've been a beneficiary of that. I know I was traveling to a particular place, and I needed money, and there was an agent there that I could make transfer to, and the person gave me cash and all of that. So definitely, in that respect, I would say yes, that we've achieved that level of financial inclusion, especially for individuals. So businesses, Nigeria has had a thriving crowdfunding, will I say, regime. And why do I say that? And how has that also contributed to improving the whole experience of financial inclusion? So before now, as an SME, if you want to have access to financing from the bank, you definitely need some requirements, because most of the financing that you get from banks, will I say, financial statements banked or collateral backed and all of that. So you have most SMEs that do not have access to those kind of requirements. So they do not have those conditions that the banks would typically want before they will have access to financing. Similarly, they do not usually have, will I say, the resources, or they do not have that popularity to be able to also access like the capital markets and all of that to raise financing. But with crowdfunding, peer-to-peer funding platforms coming up, we're seeing that quite a number of SMEs are able to have access to financing. But again, that is not to say, so yes, definitely we say yes, we've achieved reasonable success. But that is not to say that everything is perfect. More work still has to be done, and I think that is where regulation comes in. So the little success that we seem to have achieved might be cut short by regulation. So I don't know if you've been following the developments in Nigeria. You would see that we've had issues in terms of cryptocurrency being banned, And then also you would see that some of the operating licenses and, will I say, capital requirements of fintech operators has increased. And then we also have a situation where you have crowdfunding now being regulated. And in terms of the regulation, you have some, will I say, regulatory bottlenecks here and there in terms of, will I say, the capital that needs to be maintained by these fintech startups or fintech companies that run those crowdfunding platforms. So definitely we've achieved success, yes, in terms of financial inclusion, but I think again, regulation seems to be stepping in the way of us further shrinking that 40% or so that Chido you made reference to. So yeah, that is what it is for now. So and then it now leads to another question: to regulate or not to regulate. But I think definitely, I don't know whether you're going to take us to that part of the conversation, but yeah, in a nutshell, that is what has been the experience in Nigeria in terms of financial technology promoting financial inclusion. Thank you so much.
Wow. Thank you so much. And please do hold that thought that you have when it comes to regulation, because I'm going to come back on the next round of questions and I will be asking you your perspective with regards to regulation, the regulatory challenges that exist, and if there are probably any proposals that you would make so that we make the regulatory safe space for safe for all the new entrants, but at the same time while making sure that we protect the consumers and we also um, safeguard the incumbents that are already within the sectors. Now I'm going to come to you, Sia, and ask you again on financial inclusion, but now from a perspective of the gender divide, right? So there has been conversations around how technology in the financial service sector was supposed to broaden access to financial services and help sort of eliminate economic inequality, particularly between men and women. But so far, the explosion that has happened has failed to narrow that gap that exists between men and women when it comes to access to finance and financial products. There was a survey that was conducted by Catalyst Fund, which indicated that women were estimated to be only about 25% of of the total customer base for the fintech firms that were surveyed. So I'm going to ask you, Sia, what do you think about the gender divide or the gender gap that has always existed and now seems to have been exacerbated by financial services, which was supposed to, in a way, cushion, historical groups like women. So, what do you think about the gender divide? Maybe you can use examples from Tanzania or the East African community when you're looking up at PESA that you mentioned earlier, or any other example that you can give. But how do you feel when you think about technology and the gender divide when it comes to financial inclusion?
Thank you very much. I don't know about the calculation. It's basing in Tanzania, to be honest. The people who are actually leading these fintech startups are women. Women are leading the fintech startups. Most of the fintech startups in my country are created and they favor women. I will not say that they're not for everyone, but coming to look at it, women are actually leading in the fintech, in what I call it fintech innovations in my country. And I feel like maybe because of the tradition back then that women did not have access to finance traditionally back then, but then this thing has changed. I wouldn't know about other parts of Africa, but women have become more innovative and to access fintech financial technology compared to men, because there's a tendency that a woman would multitask and think twice. I'm not saying that men don't do the same, and I'm not saying that there are no men out there who have fintech startups or brought innovations and whatnot, but I think the statistics might be different when it comes to my country. Know a number of women who have started fintech companies, fintech startups, which are targeted to gender, because some there's no inclusion because some of them might be in the rural areas, and even though you might give a person who's in a rural area or even in the urban area that there's a certain fintech solution that would help, but there's always that background idea that maybe it could be a scheme, or maybe it can't happen because we're so used to the traditional way. That could be one of the reasons why mm, like fintech hasn't grown so much in the gender of women. But I would give you an example. There's a fintech startup that's called Twa. So what Twa does, it's led by Irene. Her name is Irene. What Twa does, it brings women. It empowers women digitally. It's a platform where a woman would actually, you'd have sponsors who would give you advice on where to go, how to go about it with the market. It opens up, it's a platform for women to actually advertise their market, because we're so used to traditionally that women have to maybe go on the street, or you have to work extra hard to be seen in whatever product you have to sell. So I would say that some of these startups that are created are targeted more to women and to empower them because of the gap that has been seen. That's my take in Tanzania. But in Africa, I would say yes, there is a gap, and it could be because there is no awareness has to there's no awareness as to, okay, this startup or this innovation could actually help you. And apart from awareness, I would also say access to it. We have a tendency, it's a tendency that men have more access to finance compared to women, majority of them. So for the woman to actually know what's going on, or to know, okay, maybe this thing is legit, and it could be easier for you. It's quicker for a man to hear about it, to about how the fintech compared to women. But women have a tendency most of the time to go to all these conferences. I've been in a conference where they were trying to it was a mixed gender conference, and they were trying to educate certain women in the market and men how to brand their product and whatnot. But women travel from different parts of the region with their product so that they can learn this. The only thing is the access to it. The reason why there's a gap is because of the access to it. If only they were maybe given more awareness, more education on this thing, and more fintech startups that were targeted to women would be innovated more to actually help women more to have a balance, then probably the gap would reduce. That is my take on this.
Wow, thank you so much. I'm so impressed that we're having this discussion because it gives us a different perspective. In as much as the whole world is lamenting that women have no access to these fintech products, or they remain excluded. We also then have examples of countries like Tanzania where women are actually on the forefront, which is very impressive, I must say. So yeah, I can safely say there is hope for women empowerment in that space. Christine, I'm going to shift the conversation completely different from financial inclusion and ask you about your thoughts on how fintech will likely contribute to the continent realizing the benefits of having a free trade area. So we know we have talked so many times about the African free trade area. So I just want to pick your mind on exactly where can we place fintech in that whole regional integration agenda, particularly when we're looking at economic development. Over to you, Christian.
Okay, Chido, thank you for that. And I'll begin by saying, you see, the single market, the free trade area, is a very good starting point for expansion of the network and to create access for like fintech, so that if it's like a startup in Tanzania, for instance, now there's an option to actually go across Africa because there's a larger market to target. But then what I would like to say to support that, the Africa Continental Free Trade Area Agreement, the protocol on e-commerce hasn't been like negotiated, and it's it will be negotiated at some point. But this thing it needs to be done urgently, because you see the discussions we are having is how fast moving innovations within the digital side are moving. So there needs to be quick protocols to regulate this, to speak about access, and to grant access to these fintechs, and also to digital businesses generally across the continent. And this is important because if as a single market, let's say for instance, a small African country may not be able to have such good uh, say or even impact on a global M&A that's in the digital economy. Let's say, for instance, Amazon. So, a country like Djibouti, with a population of less than a million people, and if Amazon were to say, we are not going to supply this market because maybe of the regulations there, it would be so easy, because you see the market is not as big. But bring in Nigeria with a big population, bring in South Africa, bring in Tanzania, bring in Kenya, bring in Egypt, Morocco, all these countries, bring them together, and then have a single digital market that's facing the world. It's massive. It's massive. The impact that it will have even in negotiations of Africa with other continents on protocols on how to relate with the Africa digital market would be huge. The fintechs themselves having the entire Africa continent as their base, as their target market, they would propel those businesses to great heights. And also when you think about the good that will be achieved by the populations, because you see, it's not every there's innovation, but you see, even from the global index of the innovations across Africa, you see there's some countries that rank higher. For instance, Kenya will be ranked really high on innovations that are coming from Kenya, and as compared maybe to another country within Africa, which is possibly not doing as much. But then you see solutions that are grown that could maybe target regions within Africa might be very helpful. But then also the last thing to mention is, as Africa, and speaking of development and the Africa Continental Free Trade Area, the agreements that we've spoken about, Chido, again and again, the on cyber security and personal data protection, because this is where it all comes in, when especially you're speaking about fintech, and there's personal data being collected, personal data being given by users of these platforms, and yet not many African countries, barely enough countries have ratified that agreement for it to become effective. So, Chido, I would say there's still a lot that needs to be done, and for that agenda to really be pushed forward to the point where you can say that the fintech and the digital businesses can quickly integrate and move forward within the Africa Continental Free Trade Area framework. Yes, those are my comments. Thank you.
Thank you so much, Christine, for that. Puja, I'm going to come back to you, like I said, like I promised, on regulation. Right. So, how is the regulatory landscape like generally? And what are the challenges when it comes to regulation? You have already started giving us the regulatory challenges in respect of Nigeria. I can also say in Zimbabwe, in Spain, where the central bank decided to ban crypto assets in Zimbabwe. So you can't trade in cryptocurrency at all. It's banned, right? So some of the regulatory challenges we are looking at as a continent. But then we have got other countries that are progressive. We have got South Africa that is trying to come up with a regulatory framework that also includes financial fintech firms, so to say. So, what do you think about the regulatory landscape? And because of our time, may you also maybe propose for how countries could regulate fintech? What are the regulatory buffers that need to be put in place in Africa or that are country specific? Over to you, Albert.
Thank you so much, Ido. The question is so packed, but I'll try as much as possible to, like I say, dish out my points, not taking too much time. And I think I would be drawing from what Christine has said and what Sia has mentioned. I think Christine made mention of data protection issues. So that takes our mind to the need to regulate, right? So definitely we need to regulate fintech because of the risks that are associated with it. So, and then this brings us to why do we regulate the financial industry in the first place? So again, fintech is a recent development or a recent concept, but the idea of financial services regulation has been there for a very long time. But it's also important to understand that there are peculiar risks that come with fintech that we are not even conceived at the point where financial services regulation emerged, so to say. So, but just to briefly highlight some of these risks, right? You have risks to customers or to consumers, as Christine mentioned, data protection issues and all of that. You have fraud, you have that in place. You have risks that you also have to investors, right? And then you also have issues connected to financial stability, and then you have crime. In as much as we speak so highly of what fintech has done to the continent, at the same time, we cannot act blind to the fact that some fintech products, maybe like mobile money or even trading in crypto assets and all of that, have been used as conduits, right, for money laundering, for financing of terrorism and all of that. And Chido, I think you can relate very well to this, even in misinvoicing and all of that. So when you're doing it through digital platforms, I think it's a lot easier for you to actually achieve what you want to achieve. So definitely there are risks that are associated with fintech. But again, there are also benefits that are attached to fintech, which we've mentioned. So it's about balancing it, and that's where regulation comes in. So what regulation needs to do is first to check those risks, then at the same time ensure that we can fully unlock the opportunities that fintech provides. So it means we definitely need to regulate. And in regulating, I think the key objective should be one, you should ensure that you're able to manage those risks. At the same time, the regulation should be such that encourages innovation, does not stifle innovation and all of that. So I think finding that balance is what we have seen within the continent. Maybe again, you spoke to Zimbabwe. I think I've shed a bit of light on the experience we've had in Nigeria as well. So the regulatory response has been very slow. So for crypto assets or crypto currencies and all of that. They've been with us for quite some time. Again, I can't recollect when Bitcoin emerged, but it's been a while. But again, it's just only recently that we are seeing our regulators responding or reacting to it. I understand innovation usually precedes regulation. So it means definitely the regulators would need to play catch up. But at the same time, the regulatory response has been very slow. And in some instances, you would see that some of those risks associated with fintech has already happened before the regulators are trying to respond to it. So you've had instances of data breaches, you've had instances of investors like for crowdfunding platforms and all of that. So the beneficiary of the funding probably does not even have a good business plan and all of that. And all of those things happened, and then you've invested and you've lost your money. So you've also had those issues come up because again regulation did not respond as it should. So what we've generally seen is that some countries in the continent have managed regulation well, some have not really managed regulation well. But as a proposal, that is, I think, speaking to the second part of your question, we definitely need to have a structured and a defined regulatory approach to dealing with fintech, right? We cannot deal with fintech the way that we dealt with financial services regulation before the crisis. So before the crisis, we had an idea or a sense of what the financial industry is. Banking, insurance, maybe pension can be put in there, and securities market and all of that. They were very traditional. You understood them, and we brought up rules, prudential risk rules, consumer protection rules, and all of that. The point I'm making now is that those rules, in as much as they are useful, but they do not, right, take care of the specific issues, or will I say the peculiarities of fintech. So our regulators need to move from that traditional, they need to take off that lens of, okay, this is how we regulate traditional services. So they need to understand that this is a new market and that new rules need to come into place to attend to the peculiarities of that particular market in place. So that's the first thing. And then that coordination I'm speaking to is For countries that, again, I don't want to go into the discourse on types of model of financial services regulation and all of that, but in countries like Nigeria, right, where you have different regulators for different markets. So we have a regulator for banking, we have a regulator for securities, you have a regulator for insurance, pension, and all of that. So you have separate regulators. So it's not like maybe in Malawi where you have a unified regulator. So the truth is, the regulatory model in Malawi might be a lot easier for you to actually deal with fintech regulation because you have one regulator responsible for regulating all aspects of the market. But in places like Nigeria, you'd typically see issues where there are, will I say, lack of coordination among regulators. So to be very practical, our central bank has banned cryptocurrency, but our Securities and Exchange Commission is saying that, oh, we recognize this asset as a tradable asset. And then Christine can totally relate to this. The tax man will always tell you that crypto asset or cryptocurrency is a property that can be taxed and all of that. So you have, will I say, disconnected perspective within the same country of what a particular fintech product, how it should be looked at, and all of that. So definitely there is a need for more coordination. Yes, there is a need for more cooperation in terms of, especially in countries where you have different regulators. So they need to come together, even if it means having like an MOU, right? You have coordination so that you have a national policy and all of that. And that takes me to the last part. So we need to have a strategy. Some countries have done well in that, but every country, as at now in Africa, needs to at least have a fintech policy, right? And then after you have a fintech policy, to speak to specific laws, right, that you come up with. Some of these laws do not need to be acts of parliament. You can do it by way of subsidiary legislation. So when you have your policy, you have your laws in place, and then the next thing is administration. And in that respect, it's good that we have, will I say, young people like us that to some extent we are knowledgeable in these things. So we also need to build capacity. So in a nutshell, that's how I think those are the issues I see with the regulatory regime, and that's how I think move forward in having a more robust regime that is able to tackle the issues that we have. Thank you so much, Ido, for that very for the question. Yes, I think it's. I'm really excited about even commenting on it. Yeah. So back to you.
Thank you so much, Albert. Sia, I'm also going to pose the same questions to you. What do you think of the regulatory landscape currently, and what possible recommendations would you give or proposals as to how we can best regulate fintech? Could be fintech firms or fintech products from your perspective. Over to you, Sia.
Thank you, Chido. First of all, I think that currently in most of the countries in Africa are more traditional based. The fintech disruption has even disrupted themselves, has like has shaked them a little bit in terms of their regulations. So currently, everybody is trying to be dormant and not ready for change. As mostly we Africans are not ready for change. It will probably take time because the rules and laws in place that was so we're so used to, if how we had to adopt to changing into mobile money, it also took it took a period of 5 to 6 years, and yeah, 5 to almost 7 years for us to accept mobile payments. It's a change in Africa. There's usually a tendency that we are not quite adaptive to change in compared to the developed countries. And I think currently the regulations are strict. So, but there are some countries which are trying to regulate fintech in more of a principle based instead of a rule based. So instead of us being ignorant and just saying no, the regulation is this way. This cannot happen. I think we should have sandboxes. We should be more principle based. See how it goes, because the only way you can regulate something is through seeing how it is and where you can place it. Has nicely put by Albert that they should not be so stringent on regulations. It should be something that actually encourages, emphasizes on innovation, because it is helping people. So what fintech people do is finding a loophole. But once the government sees that, okay, we can't take control of this, they have a tendency of just blocking it. What I would suggest is that they should be more principle based going forward with their regulation. Most African countries should actually give more into research. They should fund more into in researching what fintech is about, how to go about it, because there's a lot you can actually find out and learn from other developed countries, from your neighbor countries, how they go about with their regulation, how it has helped so that you can actually input it in your own system. Just as the way we adopted some of the legislations from developed countries, from our colonialists, and then we tried to shape them to fit our own regulations, in the same way that they should try and see what works for what country and how they can actually fit them in. And not only that, I also feel that apart from them having a research and trying to make it more principle based, they should be open, because if you try to put a regulation, fintech can't be just regulated with one regulation. I think Albert discussed this previously. It can't be regulated by one regulation, because if you regulate fintech and the innovations, another fintech innovation will come in. Another fintech startup will try and solve another situation. It's just to see how you go about it. So if they're more in a principle base, open up and be open to the regulations, have to be open to new innovations, it has to have a space for new innovations, so that you can be able to monitor them and then regulate them. Otherwise, if you close your regulations, say, okay, we've regulated this and this, and that is it, a new thing will come in, and then you'd also go again shocked and trying to close it, put a rule on it, and say no, it's not permitted. But I think that's the way forward that they should be taken. Those are my 2 cents.
Wow, that's amazing. Thank you so much for bringing up the idea of regulatory sandboxes. If you look at the developed economies, Australia, the United Kingdom, they are also trying to put in place regulatory sandboxes to ensure that whatever regulation they put in place, it doesn't stifle innovation or the growth of fintech firms. I'm going to ask you, Christine, to speak a bit on regulation, bearing in mind our time, but just say something about regulation from a tax perspective. I know you have said something before, but just speak a little bit more on that point in a very few minutes. Christine?
Chido, thank you. And these are very good thoughts that both Albert and Sia have shared, especially on the need to almost give it time, bring these fintechs in a place where you can observe them, see what is it that they're doing, what developments are they making in the market, how are they operating, study them, understand them, then know what's the best way to regulate them. And this applies for all types of regulations, including tax regulations. So what Sia and Albert have said would equally apply to tax regulations. But then also the other thing to say, which has been said several times, what governments need to understand to be able to collect good tax revenue, there needs to be a robust economy. The economy needs to be good. Businesses need to thrive for you to actually collect tax. You can't, if you kill all businesses, you never collect any tax. So you need to nurture them. So I would say, especially for the tax regulations, it should be in the government's interest to nurture these businesses to grow, because when they are grown, that's how you'll be able to get as much revenue from them as possible. Chido, those would be my comments.
Thank you so much, guys, for such an interesting conversation. I'm going to just give each one of you 30 seconds to give your final thoughts. If somebody who was listening and is going to remember you for something, particularly with regards to fintech, what would be that final thought that you want to be remembered for? So I'm going to, yeah, Albert, Sia, and Christine in that order. Just 30 seconds of your final thoughts.
Okay, this is what I have to say. I think as a youth from the continent, I am proud of my peers for what we've been able to achieve. So, in terms of maybe manufacturing or maybe in terms of producing hard technology, our parents did not do us so proud. But I'm really happy to see that the young people, right, with fintech, soft technology, they've actually really achieved a lot. And I believe that there is a lot that we can do as a people in the continent. I believe that fintech has a lot of benefits for us. And I think that our regulators should step their game, right, and do what is right, not to stifle it, but to allow it grow. Those are my final words. Thank you.
Over to you, Sia.
I think that we have started well and we can do better. There is nothing. Fintech has shown that there is nothing that is impossible in Africa. It has opened our eye that all those things we used to see on TV and on news that also can happen in Africa. I commend the people who are doing fintech startups, and I feel like anyone who has an idea, whether educated or you have plenty degrees or not, just get your idea on board because fintech has shown that anyone at no matter what the background, they can actually bring and solve something and become something. So I feel like our governments and the regulators should give this opportunity and should actually base more on listening to people's ideas and try to bring them up and innovate them more so that they can bring more solutions to the countries and Africa as a whole.
Christine?
What I would say, Chido, is this is very good discussions that we are having, and I would invite more people to actually even join this platform to exchange these ideas on such things. So that would be my remark. I like just anyone join these conversations because this is how you learn. This is how you know what's happening in Nigeria, Tanzania, Kenya, Zim. That's the only way you get to learn these things and know how to move forward, your country forward. Thank you, Chido.
I think my final thoughts with regards to this issue, over and above what you guys have said, is to emphasize the role of the government or existing firms to try and incubate the new entrants into the market. I remember having a conversation with someone who works for a startup, and they were talking about how it's so difficult to try and get into the market, especially when you're in new entrant. And I think we need to look at Malaysia during the COVID-19 pandemic, which was still going through, but they had an initiative where the government was actually incubating a lot of SMEs and startups so that they embrace the digital economy. So it's more or less like a call for African governments or policymakers to come up with ways so that these new entrants can be incubated, because as you have said earlier throughout the discussion, there are a lot of benefits that can be reaped or that can be realized as a result of us actually having a vibrant fintech space. I thank you guys for being part of this discussion and sharing your insights, and also allowing you to pick your mind on some of these issues. I thank you also to the valued listeners who were with us throughout the discussion. If you've got any questions, guys, keep them coming. That's how we always come up with new content. I think, Christine, we also need to have a conversation later where we talk about regulatory sandboxes. And I think we'll also invite the same panelists to come and share insights again, particularly when it comes to regulation, so that we just have a conversation that focuses on the regulation of fintech. But for now, I thank you guys, and this has been an amazing time. See you next time. Bye.
Bye.